The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this very first day of October, and welcome. There are a couple of things that I'm going to discuss following up on what I did in Larry Pesavento's show earlier. I sat in for him as away today, I believe traveling, be back tomorrow. And so the 9 o'clock show Eastern time I did, and there are just a number of technical aspects that I usually do on a Friday, but the timing was just so good that I had no choice but to incorporate into the show this morning. I will follow up right now. I'm showing you the E-mini chart. This is the 10-minute chart. They went to a peak E, doji high, right this morning at 1929.50, and that was at 10 to 4 this morning, Eastern time. And it made an arch formation with what I call the left side, right side price time match to the exact bar, with that big sudden spike after pulling back. Can you believe that it was up 13-something points, the futures? And I had my Chapman wave indicator flashing from yesterday that said there should be a Dow pullback. Even if it was just 1 point, there should be a minus. I'm saying to myself, futures are up 80 in the Dow, 13 in the S&P E-minis. Qs were up. It looked fantastic. I don't know how it works. So I said to subscribers, I don't know how it's going to work, but we should go negative and then have a rally. And that's the rally that's going to be important, whether or not it can come back. And it looked like, even as I sent out my 8:35 Traders Corner from my opening call newsletter, the final chart that goes out, I was saying, I just don't, we're still up quite sharply. Anyway, look what happened. Plunges down. Then the real candle that I should have used as a base was the candle from 9:30 last night. That was at 1904.25 low. And I said, well, one step at a time. Well, look, this one came in to the exact tick. Then it went, the following bar went underneath, bounced back. Remember, that's the rule of the Chapman wave methodology. And then it tackles, but couldn't close above the left side high of 1912 in the E-mini at 10 o'clock this morning. Instead, at 10:20, it pops up and then comes all the way back down. Now it's making that H pattern. But wait a minute. You see there's a chance that you're making a left side shoulder, a right side head, and then the head, then the right side shoulder. So we've got to be real careful here. There is still buying. I mean, I haven't listened to CNBC for a long time. It's probably the longest period I've ever gone for 30 years or something, because it used to be TFN. I think it was TFN. Or FNN. Anyway, it was a financial news network, FNN. And I used to do a daily call for the local outlet here in Boston before they were taken over by CNBC. I used to, at 9:20, I used to send them a fax with my outlook on the Dow for the day and the parameters to look for, and they would announce it. So I've been watching, these shows, and now I just don't even listen. I just don't. So I go to another room where there's a TV, and I'm watching yesterday at late in the afternoon, evening, wasn't early evening, and they're doing the same thing. They got all these guys saying, opportunity, this is a buying opportunity, this is a buy, this is a buy, this is a buying, it just kept going on and on and on. And I'm saying to myself, I don't see it. Maybe they're right. And then some of the analysts that they had, when they gave the stocks, I'm saying to myself, wow, I've got major sell signals on those stocks. Maybe I'm wrong. I don't know who's right, who's wrong, but I just don't see what they see. And so it's very interesting. Filtering out what's important Larry's show is called Trade What You See, and I'm looking and I'm saying, trade what you see, trade what you see. That's the only thing you can do. Lift your head up. Don't look at the news. Don't look at your feet. You got to look at the price. So these are the patterns we're looking at. And now I'm going to show you it's the same chart, but this time with a couple of technicals on it. There's the 9-period moving average. We just crossed under it. Crossed the 9-period moving average, just crossed under the 200-period coral-colored moving average. So that says upside now is limited, but we could be close to another bounce, number one. Number two is when you're looking at these, look at that doji candle there, that peak D. I mean, there are lovely things that you can look at. That's the reason when I had a question the other day, do I use just the bars? Yeah, in the Chapman wave, you only need the bars. You don't need candlesticks. But candlesticks give you more information. And I use candlesticks. Look, this is a Chapman wave Roman candle right here. And it says if you start to trade for 2 or 3 bars into halfway of the candle, that'll be 1901 in the E-mini. If you go under that, and you trade under it for 2 bars, you will probably test below, and you test the low of the day. This is a very important period. Other things are saying the 9-period exponential moving average is now like a little bit of a magnet right into this area. Let me just circle it. This little area right here, that's the challenge. Can the S&P get back in there? All right, enough of the nitty-gritties. Let's go to the story itself. The Dow's down 90 at 16,194. The S&P is down 5 at 1914. The comp index is down 23 at 4596. I think it's worth having a look at the QQQs right now. Look, QQQ under the 9-period moving average for 1, 2, 3, 4, 5, 6, 7, 8. 8 sessions cannot get above 102.33. Cannot hold above it. Only once has it even tried to get there. So today it wanted to do it, but it couldn't do it. The high today is 102.06. So the QQQ series has this arch formation in the weekly chart. What I said as I was wrapping up Larry's show is I said, in mine I'll talk a little bit more about the tide. I did speak about it yesterday. I'm going to talk about it again right now. When I'm looking at chart patterns, I try my very best. Believe me, it's very hard. It doesn't always work, but I try my best to trade the trend and the larger trend. If I'm looking at a daily chart, I want to know what the weekly chart is doing. If I'm looking at the weekly, I want to know what the monthly is doing. All of a sudden, at the close yesterday at 4 o'clock, I can skip dailies, weeklies. I can look at monthlies and say, right here, that Chapman wave Roman candle, remember I make up my own techniques, and this Roman candle right here says that if at any point, if the Dow is trading under 2 out of 3 consecutive days, if it's trading under 16,000, there's a really good chance that you skip the daily, you skip the weekly, and you go straight to the monthly, and that monthly is saying a couple of trades under closes, that is, sorry, I should say closes. Closes under 16,000, excuse me, and all of a sudden the wick of this Roman candle says at 15, I'm going to make it a little dark so you can see. It says at 15, let me make it brown, there, 15,370, that whole area of 15,500 to the 15,370 area will become a focus. Look at the terrible MACD in the stochastic. Very bad. Now, question, will I check my notation for the QQQ series, EFGD? Maybe, oh, I see what you mean, yes. Look, let me see. Let me just go through this and explain what I've done. And I'll go through it again in detail. Look, from this low bar of August of 2011, you made a peak A at 68.51. You made a peak A at 58.83, October of 2011. You made a peak B at 68.18, April of 2012. Made a peak C at 70.21, September of 2010. And then you pull back. But you only pulled back and held the 9-period moving average. Then you went to a D at 74.58 in May of 2013. There was a 2-bar breakout to the upside, which means that this could be called a Chapman wave instant restart, another technique that I've developed, a myriad of techniques we've got here. And all of a sudden you're running, and I said that this could be E/A at 91.36 March of 2012, and then F/B at the high of November at 106.25 of 2014, and then let me double check this, 111.16 to 111.08 is the high G/C that was made April of 2015, and therefore the next letter can't be an H because there is no H. It recycles, and then you have to go back and find out, did you make a mistake? Well, the irony is it gave a perfect D. It corrected itself and immediately said, watch out, because at peak D in the Chapman wave, that's where you've got to be most careful. So question in the den about my QQQ series. That's the QQQ. I think that's what you were talking about, right? And if that's the case, we've got a peak D at 114.39. This is a really important moment. Starting off October, down like this for 2 days, if tomorrow is down as well, then you've got to be real careful. So I hope that clarifies. And there's this Roman candle. This is not the ideal Roman candle. I like it if the body is much bigger, but above the 50% level. And in this case, it's way up. It's like a third. So it has the same context. And all I can say is that at any point in October, if the QQQ series breaks 97 on a closing basis on the weekly chart, trouble. Trouble, trouble, trouble. All right, I hope I cleared that up. Just tell me if it's clear. If it's not, I'll do something else about it. But that's my notation. And if you remember, I renotated the Dow Diamonds, and they made an E, so that the Dow itself has got a G, unusual at peaks, all-time highs, major top at G. But it happens, and this is a G at 18,351, May of this year. Couple of questions, but let me just go through what I was talking about. The tide. Because of this Roman candle, and because we've closed for 2 months, that's including September, August, September, way under the 9-period moving average, look what happened. The MACD plummeted. Look at the distance between the histogram, between the green line and the red line, and look at the stochastic at 45%. Look at the on-balance volume way down here. And look at the RSI. Right there's that gray line. I'll try to highlight it. Right there's the relative strength index. Right there. And that's not good at 45%. It's under 50%. So now I'll talk about, when we get back, I'll talk about the wash and the spray and the ocean waves.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and let's see. We've got, just do real quickly, the Qs. Oh, no, the wrong one. QQQ series. A, B, C. Yeah, I did the Dow. The Dow, I had made an AB and then an AB, and we went to a C. That's where we are. And the QQQ series, it's A, B, and we're in C. So we've got a C, but the C could fail. A failure at peak C is very negative. It says you're going all the way back to the low. So let's go to Jerry in the back page. Jerry, how are you?
Good. How are you?
I'm well, thank you.
Yeah, I have something I know. I think I know what you're going to say, but I went to. I've been watching this VRX for years.
Yes.
And it's been an amazing stock, and I thought I'm going to buy it on a big pullback. And now the pullback has scared me, and I'm afraid to buy it. I imagine you would say that's best not to buy it.
So, very interesting. So Valiant Pharmaceuticals International and branded drugs went to a peak D in the Chapman wave this was in August at 263.81. It just plummeted under the 9-period moving average. It's trading at 172 right now. Let me just put this in. So it's almost 100 points lower. Wow. You see, Jerry, this is a really interesting thing. In terms of the biotechs, up from that October low that we saw last year, where it dropped 22% and then ran up. the patterns are becoming wilder, very much wilder.
Yeah.
And because of that, what it's saying to me is that I suspect that in price, we're getting closer in many of the biotechs to a pretty decent tradable rally. That's number one. But number two is that there have been so many fund managers who have just been taken to the woodshed with that philosophy when they were so perfectly correct for 3-4 years. Just to, in fact, you know that I've spoken about this before. They had going for them, and this is fascinating because if you think about it, they were correct intraday even by buying every single dip for the last, up until most recently. Every single dip, whether it was in 1 hour, a 1 day, or a 1 week pullback, and you hardly ever go 1 week pullbacks in the IBB, they were rewarded. You see, I think that that's changed. I think that, look, now, yes, Valiant Pharmaceuticals, VRX trading down 5.5 at 172. So it goes peak A, B, C, D, E. It makes an E right here. And then it just takes out the 200-period moving average just relentlessly. Now, one of the things is it's the makeup of the branded drugs. I think that they being impacted, and probably going to be impacted more. I don't know. It's not my area of expertise. But just from hearing and reading about it, my suspicion is that they are in a different category altogether. That's why they've gone.
They make acquisitions and trim the fat, and and they've been doing that for like 10 years. It stocks up like.
And now it's time for their fat to be trimmed. I mean, this is just the way I'm looking at it. So when you say you'd like to get into it, I know just from the phrasing you used that your implication is I would like to get into it because I think over a few months it's going to do very well. And I'm saying to you, I'd like to get out of it because over a few months I think it's going to do even worse. I think it's going down to 128, the 200-period exponential moving average over the coming months. And therefore, the trade would be just a shorter-term trade. And I would suggest to you that if you can wait about, what is it, the 1st of October, if you can wait until between the 17th and 23rd of October, that's about where, in time, I think a number of these biotechs will finally have the temerity to be able to say, I think I can go for 3 to 6 weeks to the upside and have a pretty good percentage rally. So, you know, I'm very hesitant. Yeah. Look, you live in the Back Bay, so you know exactly what's going on around here. And you've seen what's happened even in the Back Bay, but more in Kendall Square, in the Cambridge area. Now it's downtown. It's on 128. I think that the biotechs have overspent. I think they're going to get hit from every side. You know, when everything hits the fan, that's when you least of all want things to go down. That's when you're over leveraged to the hilt, and that's exactly what I think is happening here. I hope, Jerry, that helps you to think it through.
Yeah. You know, I have a comment on AutoZone.
Hold on, I'll be right back. Sure. We'll be back with Jerry in the Back Bay, Boston. Straight up, Dow down 112.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back, and we're on with Jerry in the back bay. Jerry, you wanted to say what?
You always talk about AutoZone.
Yes.
I thought you might be interested in what's driving it, so to speak.
Good pun. In fact, we've got someone in the den.
I didn't mean it, but it was pretty good.
That was damn good.
The main thing is miles, so that with the low gasoline prices, that's going on. But the single most important thing is they are so profitable that they buy back stock. They have retired more than 50% of the stock in the last 10 years. They're like gradually going private, and LBO on their own. They just keep buying back stock, which makes the earnings per share higher and supports the stock. It's like, sort of a rigged story.
Right. So I've got Peaky in the den says AZO, another load up on debt and buy back stock at high vehicle run by Eddie Lampert. He used the same thing. He didn't realize it. Peaky, you used the word vehicle in the car and truck parts stock. So, yeah.
All right,
this is
to be interested in that.
Let me tell you something. We're talking about AZO. I don't care what they're doing. In the Chapman Wave, they've got a peak F, a second peak F, the last one on August the 19th at 754.90 with a round number open of 742, plummeted. Well, I shouldn't say plummeted. It dropped sharply down to 667 round number low. It ran up to peak A, B, C, D, E, and this is an F again. And there's a horrible candle following that peak F, just as there was before. I don't know what's propping it up right now, but I would not be surprised at 758.14, the all-time high, if in fact if AZO takes out in the next, it doesn't even have to be a week, in the next, well, let's call it 3 to 6 trading days, if it takes out 715 to 712 support, closes below that, I think that we'll be looking at one of the final sectors, the auto parts, starting to break down because it's one of the leaders. Last week it made an all-time high, and it's possibly in the weekly chart a peak F. And I'm wrong if it takes out the high of, well, 739.99 was the high of the 29th. I was anticipating that there would be a pop-up towards the what did I say? I think it was 739 to 743 area. If there is that and it starts to make a right shoulder failure, that's also going to be good, going to be very poor. There aren't too many.
I don't know, Ned. I just thought you'd be interested in like.
Oh, no, I am. Not only am I interested in it.
When it dips, that's when they come in and buy it. So it's
yes. Now that's fascinating that you say that because SHLD, which is Sears Holding Company, and folks, if you've been into, I haven't been for a little while, but I especially went in the last time I had a chance. I went into a Sears Holding store. They have nothing. I mean, there's nothing original.
No, that's the biggest mistake he's ever made. Yeah.
But he might have made a mistake. It was at $1.95, and it went down to $9.44 in November of 2008, and then it did run up to almost 100. It went to 107.60, 108.06 back in 2010. Now it's just gone sideways. We know from experience that these rectangle formations they are deadly because they wear you out emotionally, because every time you think it's going to break down, it trades back up. Every time you think it's going to break out, it trades back down. At some point, if Sears Holdings breaks under, if it closes under 20 for 2 weeks in a row, I don't think that any Lampert's going to be able to do anything to stop it from going down to the 17, 15
that one I
area.
wouldn't touch. Those are horrendous fundamentals. Well, the problem there is the short position is huge, like 20 or 30% of the float. It costs you money to go short it, like you have to pay a daily fee. It's tough to play it on the short side. It's so expensive.
I'd mentioned this to a friend who's really an amazing marketeer. When I say marketeer, he understands markets. He understands the retail business very well. He had worked with many of these guys. He had gone to school with many of these guys and then worked for them. And I said to him, I don't understand the Sears. Every time I'm about to short it, thank goodness I don't, because it has this huge spike up. And time I think, well, now's the time to short it, but I'm too afraid to, it drops. And I think that this has been this is one of the most manipulated stocks I've ever seen. There's nothing there in Sears. I don't care about the property and all that. So something's going on. And I got people in the den saying he's cashed out. I don't know what J&J's talking, which one he's talking. Wait for the end of AZO story. Oh, okay. There's always a story behind the scenes, but the stock chart is saying, just watch out. Both of them, AZO and thing. Now, you remember I used to have a stock that I spoke about forever. I'm trying to think. Men's Warehouse took them over. What was it? Joseph A. Banks.
Oh, Joseph A. Banks, yeah.
And I'd spoken about this, and I said, if you just bought Joseph A. Banks way back in the 1980s and then went on your world cruise and went around and around the world just enjoying yourself, you would have been the wealthiest person, because throughout every crash and everything, it just kept going up. And this is an amazing company, because what do? You buy one tie and they give you 7 suits and 9 pairs of shoes for nothing. I don't know how they did it. It was just unbelievable. And then Men's Warehouse takes them over or buys them out.
That's a story I don't understand.
Now, Men's Warehouse is paying the penalty because it's gone, this was a short, I spoke about it and then I just forgot about it. It went to 66.18 June of of 2015, peak A, B, C, D, E. Wait, no, then recycles A, B, C, D. So it makes a D right there at 66.18, comes back in the quickest time. This is where the downside looks like it crashed because it came down quicker than the upside. And it looks as if it's going to test the low of 39.77. And the monthly chart, I'm going to do this quickly. A,
Wow,
B,
that's pretty
C,
ugly,
D,
yeah.
E, F is in peak
Wow.
F. So I think Men's Warehouse is the one who finally pays the piper, and the guys who ran the other stuff are just laughing and chuckling away and saying, come on, how can you buy one tie and get 7 suits for nothing? How silly can you be to take us over? But we are very wealthy and we don't really care.
What a
So,
game. Yeah.
yeah,
All
this
right.
is a
Thank you
very-
very much. Thank you
this is a
very
ve-
much.
Thank you for calling. Gave me an opportunity. I had forgotten all about Joseph A. Banks. So thank you. Have a great day. So that's Jerry in the Back Bay. So I'm going to put Men's Warehouse. So it's had a huge move, but I think it's still going to go lower. But in the meantime, back at the ranch, look how it hit the 9-period moving average, pop today, and then it dropped. So, okay, a couple of things that we wanted to get. Men's Warehouse, you do not get anything for free. They just hike up price of the first suit. Yeah. I understand how the whole process works. Obviously, they've got a plan. The plan is that it doesn't matter what you're buying afterwards. They are just making enough profit to keep making profits all the time. And this time, it's sort of backfiring. And, this goes with, look at GPS, the Gap. I looked at their products earlier in the summer, and I thought they had some really nice styles. I didn't like the styles last year. I thought the styles this year were good. But the retail business, as I say in the business, the schmutter business, clothes and stuff, it is the toughest business. When it's going well, it is going well. If you cater to the teenagers, it's even worse because, teenagers, the fad can change overnight. Just one day you're in, and the next day you are out. And that's what it looks like. Look at this. There's your cup formation, that what I call the drop bucket formation. First, it goes to a high of 46.56 in August. This is GPS Gap Inc. trading at 27.80, down 70 cents. So in August, it goes to 46.56, all-time high. It makes a cup formation, goes under the 9 EMA. MACD and stochastic are fading miserably. I have this on my list as a short, I forgot. 46.85. So it goes, what is that, 25 cents? 25 cents higher, something like that. 27 cents. And then it double tops with the worst technicals in the monthly, and then kaplop. It makes a 1 to 1 to the downside. That's the one from the top to the bottom in the cup formation. And it's gone below that. 24.54 is the 200-period exponential moving average. I tell you, this is very interesting. So, okay, what I want you to do now is I wanted to do a couple of things. You saw that USO popped up. I don't know if it's still holding. Oh, gave it all back. I was speaking about that on Larry's show. I said in crude oil, I don't care what's going on. There's a glut out there. It's just an emotional spike to the upside. I just wasn't sure how it could continue rallying, and if it did, it would only go to the top of the band of the rectangle formation. Is this what I did? Is this the one I did? Yeah, this is the one I did. So I said, there's a trend line, a dashed trend line. It's going to break and hold above it. And that trend line implies that the high of the 23rd at 47.15 has to be taken out and held. This is where sometimes you can spike above. I just want the leg. You don't have to close there. Yeah, you had to close there. Why? Because you wanted to drag the MACD up further, and you've got to get the stochastic off the 30 area level. It's got to be, in a leg like this after coming up from 37.75, up 8 points, you should see the stochastic at the 42% level, not 33. I don't think that this is a story. So as far, and I didn't mention that because Jerry's the one that always talks about the USO. I don't know if he's still short. I know he's been short for a long time. Jerry in Back Bay, who just called. Now, I was going to talk to him about it, and then I forgot. So, yeah, this is a very interesting period. Now, let's just get to the nitty-gritty of the market. One of the reasons why we didn't want to take any long positions here, we missed a fabulous percentage play yesterday on a particular 200% long position. I said to buy it before, I think it was quarter to 11. Well, it was quarter to 1, and it hit exactly the price we wanted. After the gap, it pulled back sharply, and then it had a fabulous rally into the close. Hey, big deal. I'm not worried, but it's the shorts that we are putting on. And we're trying today to add to the short positions. And one of the reasons is the tide. When we are looking at monthly charts, now I'm going to get the chart out. Let's take the SPY, because I think many of you actually look at the SPY. You don't necessarily follow the index itself, the SPX or the Dow. You look at this. So we'll do that. The S&P made a 2-bar, it's really like a 3-bar Chapman wave reversal from May. At 213.78, the next bar high was 213.24. But here's what I want you to look at. Let's make this nice and big. You see this? I'm going to make a vertical line. Here's the all-time high. You see the stochastic, and I'd spoken about this forever. I said that all of this year, I've been watching the technicals fail on the S&P, the Dow, even the Qs, the IWM especially, and the retail, the RTH index. And it says to me that the technicals are deteriorating while the fundamentals, meaning the price, is giving you a false representation of what's going on. But price is the arbiter of a trend. So you can stay high in this upper area for longer than your patience. And there's that rectangle I drew again. And then out of the blue, you get that it was an aberration, that Monday spike to the downside, but the price is the price. And someone in the den said, are you trying to tell me that what I'm seeing is not what I'm seeing? And the answer was, absolutely, what you're seeing is correct. But I think that there's something else in play, and that says that you can rally because that was an artificial VIX spike to the 50s, and therefore it limits the upside, but it also limits the downside. Remember, we've been talking about the SPY daily. Remember this? I'm using different techniques to show the same thing. That SPY, the price, Chapman wave price volume spike low at 182.40 says that you can stay buoyant without testing for 28 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27. I just completely forgot about counting it. We're 27 days up. Would you have believed, if you were a bear, that you could bounce and then not come back and retest? If you're a bull, could you believe that you came off that low so sharply and then you weren't able to break into at least the breakdown area of the 18th of August at 210.68? We're at 190.88 right now. So what this is saying is that the SPY is making lower lows. This is trough D with a doji candle. It says that you could still make a little bit of a U shape here, but it is getting closer and closer to the time frame where not the break to the upside of 202.89 takes place for a leg D, but in fact the low of 3 days ago, 186.93, gets taken out. Doesn't have to be immediate. And here's the other part of this technique that I developed. If in 28 days the price is making higher highs and higher lows, so far it's making higher low than it did initially from 182, but the short term is making lower lows. So that would say maybe by Monday, Tuesday, I don't care what the reason is. If there's just a sudden spike, I don't know what will take it there, but let's just say there's a sudden spike towards the 197, 198 area. It says you can go for another few weeks holding that pattern sideways. Wouldn't that be interesting? I'll be back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Folks, don't forget, we've got Daryl coming up, and of course, you really want to be aware of what he does, how he explains the Nadex platform, how he uses it with all these different techniques. Great show. Then, of course, what have you got? You've got 12 to 1, you've got Daryl. Then you've got Steve Rhodes, and Steve does this historic work on looking back at all these different indexes and what they've done on certain days. Does tremendous work. Then you've got Dave White. Dave does he uses volume in a certain way, and he uses a certain. The way I interpret it is that he uses momentum or lack of momentum in volume, and how it fits into both Gartley's and butterflies, etc. Just a great work. Just terrific. Tom O'Brien, what more can I say? Tom O'Brien, 4 o'clock, 3 to 5 o'clock, and today being Thursday, you got Andy Heff. Just great program. And let me do this. I had a question, and this is a good question. Let's see. Basil, love your show and your work. You were discussing the QQQs and mentioned the monthly. You like to see a Roman candle with the body the same length of the lower wick. Given this is an ETF and the problems with selling on the 24th, would you say that this may actually be closer to 50% of the total candle? Great question. And he also asked me about Google. So let's just do these, if it's right into what I'm looking at. I think you've got a really good point. but a candle is the candle. So I'm going to say that in terms of my work, looking at the QQQ series, the principle of what I'm talking about is exactly the same. So all I can say is that if the QQQs break this uptrend line, this green uptrend line at some point, in fact, I was talking about the price, but I'll do it again. So if the Qs start to trade underneath 96, I think I said 96.50, but let's call it 96. Close under 96 for 1 or 2 weeks, actually even for 3 days. But certainly for the weekly charts, I'd like to see it. There's a real good chance you're just going to go back. The weekly did give that Roman candle. It's actually a green candle, but it has the same impetus. Okay, so a couple of things. So let's look at Google. Because Google, Amazon, they're all in the same situation. They've had fantastic moves. They had this big spike up. Google had this tremendous spike up to a peak D in the weekly chart. I'm going to make it real simple. If you want to short Google, there's one way to do it I can see that is the safest way, and it is in steps. Right here at 605, you can start a very small position. It's really a starter position because I would add to it if it closed under 598. I'd add another small position. The best is if there's just a sudden, I don't know how we can do it, but if there's a spike above the 9-period moving average towards the 614, it's at 605 right now. To me, that would be the best place because then your risk is like 7 points to the upside. So that's why I'm saying make it small. So it's three ways of doing it. One is you start a little bit now, and you add to it on a break below today's low in the 599 area. And so that's one with the second one. And the third is if you are short that, and then it suddenly has a spike, you just got to watch 611 because that's the 9-period moving average. I don't think it's going to make more than 5 to 7 points above. So that's why I say very small positions. Your real shorting would be the break to the downside. I would start adding if it gets under this candle here, the body of this candle of the close was 594. At 594, yes, it could be an H pattern bounce, but that's where you got to watch it real closely, and that's together with the market. Okay, now let's do this because we're about to wrap up. And folks, have a wonderful day. Don't forget my services, the opening call. Go to the front page. This is just a perfect time for it because we're starting to add to our positions, etc. VIX index. The VIX index is actually above the 9-period moving average right now at 2452. That weekly chart tomorrow is going to be so important because that'll be the 1, 2, 3, 4, 5, 6, 7. 7 weeks above the 9-period exponential moving average only happened way back. No. 1, 2, 3. No, it hasn't happened. You haven't had 4 weeks of closes above the 9-period exponential moving average for a long time. That's saying they are buying protection, and you should be protecting as well. Hey, have a wonderful day. Stay tuned for everybody else, and I'll see you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.